Hi everyone. Morning. This is Rajendran here from Market Calls, and in today's session we'll be discussing about Supertrend and filters, and we'll be testing the performance across various time frames, and probably we'll try to focus currently on Nifty and Bank Nifty futures, and we'll be trying to compare two versions of Supertrend in this webinar. The current version is Supertrend version 3.0, and the upcoming version is Supertrend 4.0, which we added a little filter to improve the performance, and we'll go through it and we'll try to understand the nature of the trading system. All right. So prior to that, a disclaimer for a safer side. So trading futures and options involves substantial amount of risk of losing, and it's not suitable for all kind of investors or traders. So probably, it involves a lot of risk. And whatever the performance shown here, it is not necessarily indicative of the future results. And we are not selling AmiBroker, and AmiBroker is a registered trademarks of amibroker.com. So we don't represent them in any other manner. So all we do is use their trading analysis system, and we do post a lot of blogs about AmiBroker, right? And how to use the trading strategies. Right, and a little bit about me. So probably, most of you here know about me for a very long time. Still here, I'm running a financial startup, mostly in the financial services space. I'm an author of marketcalls.in. So it is started way back, and it's running up since September 2007. I'm a trading system designer, system trader, and a financial blogger. I used to blog more on financial markets, trading analysis softwares. If you want to know more about me, you can go to www.marketcalls.in/about. So this is about me. So we'll go to the next slide. This is a slide which is there in my every PPT. So we don't talk about trend lines, Gann, Fibonacci, Elliott waves, or we don't talk about more on trading patterns and divergence, news, fundamentals. So whatever the webinar we are doing, it's more on kind of an non-subjective interpretation stuff. It's more for system traders, right? So if you're a system trader, take advantage of this stuff. So we'll get into Supertrend. So I kept less of PPT contents today and more of live demo concepts, live testing, so that you'll get a more understanding about the nature of the Supertrend, and we can have a better comparison as well. So the Supertrend version 3.0, probably if you Google, you'll be able to download the AFL code. AFL is nothing but an AmiBroker formula language, right? And in this version of Supertrend is nothing but an long and short trailing stop loss based trading system. It is an ATR based trailing system. Generally, it is we can call it as like a channel based trading system. However, you're not seeing the channels like a Bollinger Band here. At any given time, you'll be seeing one of the channels, which ideally acts like a trailing stop loss. It is supposed to be a Bollinger Band kind of channel, but it is not. But the code has been written in such a way that at any given time you will be seeing only one band at any given point. So if the upper band has been broken, you will be seeing the lower band as the trailing stop loss, which is represented as a green line here. And whenever the lower band is broken, you will be seeing the upper band as the stop loss, right? So if you look into the picture, you will be seeing a line running a combination of green and red, and here each and every buy and sell signal is triggered at the end of the candle. So if it is a 5-minute chart, the signal will appear only at the close of the candle. Even if there is an intraday whip, if it dips below the trailing stop loss and once again reverts back, it will not throw away the signals as long as the bar completes. All right. So the Supertrend version 3.0 is you have an alerts as well. So whenever the buy and sell signal is coming, you will be getting an pop-up alert, sound alert, and there is an dashboard which tracks when the last signal has came, what is the current trailing stop loss, and what is the profit or loss for the particular signal. So these dashboard will track the profit or loss with respect to the arrows to arrows. So it will track the signals, it will track the profit and loss from arrow to arrow. And there is also an last 5 trade results, so you can go through that. So what happened in the last 5 trade results, that is represented in terms of number of points of either a gain or a loss. Apart from that, you can see an target lines. So these target lines is not for system traders anyways. These target lines are for some people want to trade intraday, some people want to do discrete trading. They don't want to trade a particular stock or an index all the time. So they used to correlate with some other factors, and they want to trade a particular stock for some time. So ideally they want to book some partial profits, or they want to book some full profits. So what the facility has been given is people can set their target lines in the AFL codes. So these are just like an arbitrary lines. It could be your Fibonacci lines or some other lines which you want as a target, but it doesn't make sense for a system trader. Anyways, the system trader will just simply follow the rules. I mean, it is not recommended to add more and more money management rules if you want to go systematic way. More and more money management rules, some cases will reduce the risk, but some cases will reduce your compounded annual returns. So if you are comfortable with doing a specific money management principle, do clearly backtest and then go for such kind of money management principles, right? But however, I mean, in this particular style, I mean, money management is not advisable in case of Supertrend version 3.0 if you are doing a systematic trading. If you're not doing a systematic trading, then it is fine. You can go with your partial booking or a target rules to control your risk. But however, when it comes to systematic trading, it is not advisable, right? And anyways, we'll be discussing about the performance of version 3.0 shortly. So we'll be trying to do an back testing, and we'll be trying to compare the Supertrend version 3.0 and the version 4.0. And these bands, which I told, the upper bands and lower bands, are built using a formula of 2 factors. One is a factor and a multiplier. I'll just go through the code properly. Try to open my AMI broker. Just open my AMI broker. If I go to the formula, just go into the formula, you can see it's a very simple formula. I mean, it's a very simple formula. It has 2 inputs. One is an factor, another one is an ATR value. The default values are 4 and 10. And like as I said, there are 2 bands. One is an upper band and another one is a lower band. The upper band is the formula is high plus low divided by 2. And plus factor into ATR, and the down channel is high plus low divided by 2 minus factor into ATR. So the bands are built this way, and what we can observe from here is whenever we are reducing the factor, the current value is 4, and if you are reducing from 3 or 2, your stop loss level get decreased, and the factor is the one which will control your trailing stop loss factors. So lesser the factor, more number of trades, and more the factor, you will have less number of trades, and your stop loss will get bigger. So if you are increasing the factor, means you are increasing your risk, right? So this is the thing. So we don't have any filters here as of now. So whenever there is a buy, we'll go for a buy signal. Whenever there is a sell, we go for a sell signal. As I told, the buy or sell signal is happening after the end of the bar. So the ideal way of buying is we'll be buying at the next bar open. So we have to instruct our systematic trading or our backtesting engine, like, we just want to introduce a delay of 1, 1, 1. So probably if you would have attended the AFL webinar, you might come to know about, like, it's 1, 1, 1, means, we always buy at open, we always sell at open, we always short at open, we always cover at open. Once the candle ends and the next bar opens, immediately we'll be placing the orders. Right? This is the way we have to instruct our, if you are trading algorithmically, this is the way you have to instruct your backtesting engine, as well as you have to do relevant settings in your algorithmic platform, so that your order will always get executed at the opening of the next bar price, right? And there is an there is a way to declare your position size. So if you want to trade 4 lots of Nifty always, so you have to set like 100. In this here it is set as an the position size is set as 1 because it is doing some live. It is tracking the last 5 trading dashboard results. But however, if you want to do a back test, you have to change the position size and you have to set the relevant trade delays according to a requirement. And initial equity, you have a control to set down here. I'll go through the other steps, how to do a back test and how we can analyze it. So these are some of the basics you have to know about it to test any kind of trading system. It is not only about Supertrend. Supertrend is a quite popular trading system. It was done somewhere around 2008, and in India it has been first introduced by Falcon. Later, almost none of the platforms are using till 2012, and we has been in market calls coded. I personally coded Supertrend during May 2012. So from 2012 onwards, probably it gets little popular among Indian users. Earlier only in MT4 we have Supertrend. So I translated from MQL code to AFL code. So there is no automated procedures available as of now. So if you want to code from MQL to AMI broker, one has to do it manually. One has to sit and understand the AFL coding of. One should be familiar with MQL as well as AFL, and should be familiar with trading systems. Then he can transform from one trading system to the he can code from one platform to another platform, right? Fine. So these are some of the basics, and it was initially popular in forex markets among forex traders. Now it's quite popular in Indian traders. But is it really an worthy indicator, or what is our opinion? These kinds of opinions we can come to know about it only if we are good at backtesting. We can understand any kind of trading system, whether to trade or not to trade, which instruments we have to follow, which time frame we have to follow. These kinds of analysis will come only if you have a very good backtesting skills and a little bit of understanding about the markets and little bit of understanding about statistical skills. These are the damn mandatory skills required to analyze any kind of trading system. If you have an additional programming skills, yes, it is fine. You can take your trading system to next level. And let's jump into an Supertrend version 4.0. So this is there is also one more version which you can see in our live chart. This is nothing but a multi-time frame dashboard. So if you ask me how it differs, it doesn't differ in the logic remains the same, and instead of having a one single dashboard, we have multiple time frame dashboards which will track what is happening in the other time frames. Because some traders asked what is happening in the other time frame. I also want to know while the trading is happening in an say for example a 5-minute time frame. I just want to know what is happening in the 15-minute and hourly time frame. But can I follow on other time frames as well? Personally, see, Supertrend is not suitable for multi-time frame trading. If you're following 5 minutes, do follow 5 minutes. If you're following 15 minutes, do follow 15 minutes. Otherwise, if you feel multi-time frame is comfortable to you, do a prior testing whether the multi-time frame is comfortable to you or not. Then you just go for the real trading, right? And without backtesting, it is not advisable to trade any kind of trading strategies. Don't blindly go for blind betting. It's once again you're just you want the signals to be predict the markets for you, but ideally these indicators will not predict the markets. These are just mathematical models. High plus low divided by 2 minus ATR into factor. How it could predict the future of the trends in the market, right? So maybe at some point of time it looks like predicting. It has some great predicting skills, but ideally it is not doing any sort of predicting skills in the market. What it is trying to do is we can use these kinds of, not these kinds of models, any kind of models just to control our risk. It is not good if you are using mathematical models for predictions. We can use, but there are certain models which has little bit of prediction power in it. But we don't call it as a prediction power. We say it like, it has some high probability trading stuff, right? Ideally max, it's just the logic behind it. Don't have any prediction skills in the market. Its market is so dynamic, and the one which the trading system which working in the current scenario may not work in the future. So it's always required from a trader side a little bit of dynamic and an understanding about the market dynamics. That will help you in fine-tuning the system, so that you can adapt yourself to the trading environment. Okay. So my viewers, if you are using a multi-time frame dashboard, don't. If you are looking into what's happening in the other time frame, it is fine. But if you are trading 5 minutes, do trade only 5 minutes. Don't look into the correlation of I want to buy when the super trend and 5 minutes is giving a buy, 15 minutes is giving a buy, as well as hourly is giving a buy. Don't try to do that. It is not advisable. And if you are trying to do that, make sure that you are tested at least some 1,000 trades or 2,000 trades, or that is a bare minimum required. Don't try to correlate with an 1 or 2 months of data. Don't try to do not even 6 months of data is not advisable to backtest. It's always required to backtest and 4 to 5 years of data. Minimum of 3 years of data is required to backtest across, and if you're trying to backtest in a lower time frame. If you are trying to backtest in a higher time frame like a daily charge or a weekly charge, at least a minimum of 10 years of data is required to backtest any kind of a trading system, right? So this is the one, Supertrend version 4.0. The channel logic remains the same. It's the same up channel and the down channel as we spoken earlier. And here there is one more filter has been introduced. It's just a simple 200 EMA line. So what we say is, we say to the system, buy only the if there is a buy in the super trend, as well as it stays above the 200-day moving average, and exit when the super trend breaks on the downside. And when going for a short, make sure that the super trend line breaks on the downside, as well as the 200-day EMA is the candle is below the 200-day EMA, so that you always bet only the long signals if if the trend is completely above the 200-day moving average. So here this shows the last 4 or 5 days of market. You can see like the market is still above, trading above the 200-day EMA. So you can see, and the long signal is came during April 5th, from April 5th onwards, and once again on April 7th there is a star. The star indicates an exit. Whether it is an buy exit or a short exit, it always represented by a yellow star here. So yellow star generally represents you close your position and wait for the next signal, right? So when the trend is in uptrend mode, I mean generally it doesn't break when the trend is going to be strong. But however, in the lower time frame, you can expect a little whipsaws. Like there are 3 whipsaws has been happened. So if you are trading in a Supertrend version 3.0, it says like, I mean, you take the trade, you take that instead of a yellow star exit, you go for the short trades. So in when the trend is going to be very strong, you will be, I mean, saving a lot of trades in. You will be saving a lot of losing trades if the trend is going to be very strong, and it's going to be remain above 200-day EMA, or if the trend is going to remain below 200-day moving average for a prolonged time. So in such cases, you'll be saving a lot of points, and losing in a bad trades. If you ever get it. So this is one trade. I mean, here on April 9th, there was an exit signal, and once again markets reverts back to the trailing stop loss. So these kinds of trades can be avoided, I mean, in case of an Supertrend version 4.0, and consistently it had delivered better results compared to version 3.0. Right. So you understand, probably you're able to have an idea about what's happening in Supertrend 4.0. Probably we'll be going through a live demo once again. We'll try to understand. I'll try to run a bar replay so that you'll get more idea about how the system works. So a little comparison. The Supertrend version 3.0 will always in a position, and it has an lower winning ratio. The winning ratio comes around 38 to 42%. It depends. When I say 42%, it doesn't mean like every month on month it will give a 42% winning ratio. It is not like that. When the market shows the trendiness, it could even give an 65%. It could give an 80% in a month. When the market is highly compressed, it could give an 23%, or it could give a 30%, or it could give a 35%. So on an average, for the last 8 years, I mean right from 2008 onwards, almost for the last 7 or 6.5 years, the average winning ratio of Supertrend remains between 38 to 42%. If you try to do a backtest for an Nifty futures or an Bank Nifty futures, and the risk is not very interesting. It is not. It has a little bit of. It is slightly risky to trade, and it gives you more number of trades. This is with respect to the Supertrend version 4.0. I'm just talking about it. It gives more number of trades when compared to Supertrend version 4.0. And when you talk about Supertrend version 4.0, it doesn't. It will not stay in the position all the time. It doesn't long and then exit. It doesn't short and then exit. And there are certain cases where a long will be reversed by automatically by a short, because it will be triggering a sell signal in Supertrend, as well as it will be closing below the 200-day moving average. So in that case, a long will be reversed by a short. There is no one. I mean, only if it remains below the 200-day moving average, the long signal will continue, and then it will be followed by an exit. It will be long. Once again, we will be going for a long. It will be an exit. Whereas here it will be in Supertrend version 3.0, it is always a long exit, and both the trading strategy will be carry forwarding the positions every day, every week. So I mean, there is no question of can I stay outside for a week. It is not at all acceptable if you are into systematic trading. You have to trade all the signals. You don't have any mercy. So you have to go through a certain period of drawdown where your underwater equity will remain a negative side. That is also we have to go through it if you are doing in systematic trading. Otherwise, if you have some sort of market dynamics, you have a certain knowledge like when to start a trading system and when to stop a trading system. You can have some certain kind of filters. so that you can instruct your trading system. I don't want to I don't want to say you can put a rule like I don't want to trade any of the fundamental news. So you can put a ban on fundamental news factors. So these kinds of say an RBI news is releasing or some sort of election is going to come, and you are expecting an huge huge upside or downside which may harm your trading system. So instead of putting an instant ban in your trading system, it is always better to code your rules, try it out, test it out, and then go for live trading, right? So don't try to put an instant rules and then don't try to change or modify the rules whenever you want. First write down the rules, put some certain filters. If it is an ban, you try to put a ban whenever you want. Say you want an fundamental bans like an RBI news or some stock relevant news like an earning result news. So these has to be predetermined. You have to instruct the system like these are the days and these are the time the news is going to release. If there is any signal is generating, I don't want to take any such signals. So those has to be pre-coded in the system itself. So if you don't have an if you're not able to code such rules, then it is always better to have a predetermined mindset to trade such rules. Do write it in a paper and put when are you going to ban the system and when are you going to run the system. So put some ban and then follow your rules accordingly. Don't try to break your rules once it is pre-decided, and don't exit in panic anytime, which is not good for systematic trading. Always, if you don't want to trade the system, always be clear at which point of time you don't want to trade the system. All right. So these are the things which always require to believe in a trading system to continue it further and trading for a prolonged time. Otherwise, always looking for a better indicator doesn't make sense. Okay. So this is an equity curve of Supertrend version 3.0. If you look into the equity curve means this equity curve has been generated in Nifty futures for the last 7 years, right from 2008 to 2014, where 100 shares of Nifty means 4 lots of Nifty has been included with a brokerage of 100 rupees per transaction. Means 100 plus 100 200 will be for 2 legs of Nifty future as a brokerage. And if you look into the equity curve, it says something when Supertrend is it's good, but the performance is not really enough to make consistent returns. What it says, if you look into the period of 2008 to 2010, we are just playing the long shot, and we are carry forwarding every week. It says like the results are good because by that time the volatility in the market was really good. So during 2008, the VIX, India VIX shooted above it remains above 20 in 2008, 7, 9, 10. So probably if you are trading Supertrend, when the volatility is very good in the market, the system is making consistent returns. But later part, after from 2010 to 14, yes, it was growing, but it is not growing at the same speed which is supposed to be expected, right? It is not behaving the same way because market is also not behaving in the same way. So market is highly dynamic. The one which we backtested in the future, if you try to backtest the same system in 2008 to 2010, and if you are trying to trade the system after 2010 onwards, you will be surprised to see such an non-performing trading system which is supposed to deliver a great returns. It's not happening because the market has changed its nature itself, right? So this doesn't happen in Supertrend only; it happens across all the systems. So little bit of market dynamics knowledge is really important to understand such models to be performed across all the situations. It is not like we do write a rule and it performs across all the market situation. It works good in a high volatile environment. It works great in a low volatile environment. It works good in a bull market. It works good in a bear market. The strategy is not that way. I mean, these are very static strategies. If you want to build an advanced level strategies, you have to go for an highly dynamic strategies. One is an regime switching models. So probably I'll be talking at an Traders Carnival conference about how to implement an regime switching models so that it can adapt to at any kind of an trading environment. And the one is an Supertrend version 4.0. So both the things, both the equity curves are generated in a 5-minute time frame for Nifty futures. And if you look into a Supertrend version 4.0, the one which have an long and exit, short and exit kind of models with a 200-day moving average filter. So it looks like pretty smooth. Yes, it had delivered on same sort of returns during 2008 to 2010, and still comparative to version 3.0, the equity curve is relatively smooth. More the smoother, more it is good in more good in controlling the risk, right? And if you ask me which one is better, version 3.0 and 4.0, by looking into the equity curve itself, one can judge yes, version 4.0 is really good. But is that enough? No, it is not enough. We have to look into a lot more factors. But yes, the overall performance says like the version 4.0 is really good and systematic trading when if you want to do something algorithmically. Version 3.0 is pretty inferior to 4.0. Right. So you go for an live backtesting. So everyone with me, just give me a confirmation. Okay, great. Yes. So I'm just going to the database of mine, NSE futures. So I have a collection of data right from 2008 onwards, and I'm just trying to do a backtest with Supertrend version 3.0. Right. I'm just going here and just checking my money management rules. So I'm just setting the trade delays 1,1,1,1, which is nothing but we'll be always buying at the next bar open, and always we'll be trading 100 shares of Nifty futures, and the initial equity is 2 lakhs. I'll tell you why it is 2 lakhs. I'm just saving it down. So I also want to tell the backtesting engine what is the periodicity I want to use. I also have to tell what position I have to use, whether it is a long and short or only the longs or only the short models. So in our case it is long and short. We are going to play both long and short. And commissions we can set according to your brokerage. Some people will have a discount broker. It has very less brokerage. If you are using an high broker, prime brokers like an Sharekhan and ICC Director and HFC, you will be having a slightly higher brokerage. And once again, the margin, it depends upon your broker. And since we are trading in a futures mode, we have to enable futures mode so that your margins will be accountable. Right? If you are trading in a cash, you have to disable the futures mode. And if you are in futures mode, just enable it and then press the OK button. Apart from that, to backtest any kind of an instrument, each and every instrument has their own lot size, right? And when it comes to futures, whether it is a futures or option, we have to set the lot size for each and every single instrument. So we can go to symbol and then information. Otherwise, you can find at the left side in your broker screen. So you have to set your round lot size. The round lot size is 25 here, And each and every instrument, since each and every instrument has their own margin requirements, so we have to set. I'm just setting as an, I'm just putting as an minus 10 here, whereas each and every stock will have their own margin. The minus represents in terms of percentage here, right? So if you are trading in an US markets, it will be slightly a different game. So where your lot size will be always 1 and your tick size will be different. I mean, your point value will be different. So for Indian markets, so this backtesting example is only for Indian markets. So here I'm just putting an round lot size as 25 for the Nifty futures, and the margin is minus 10, means the minus negative value represents here in terms of percentage, means 10% of margin is required. Some brokers will give it 8%, even there are some brokers which give that 5% are at a different rates. So according to your broker, you have to set your own margin deposit requirements. However, if you are using in an European markets or an US markets, your lot size will be always 1 and your point value will be the number of points, like it is for an ES mini or different futures. So your round lot size is always 1, and your total number of shares you can put it in the point value section, right? However, this is the settings for Indian markets. And then I'm just selecting current, means I just want to do the backtesting only for the current course, which is nothing but Nifty 1. And the range, what is the range I want to select? I just simply want to backtest for the entire historical data set. So I'll put it as all codes. However, if you want to do a month by month backtesting, you have to use a from to do back dates. From to do dates, you can set the from date and the to dates. Then you can test for the particular range of the period of your requirement. So in this case, I'm just simply putting an all codes, right? I'm just doing a backtest. So it throws out me a lot of analysis, a lot of statistics in front of me. It will tell me when the system had entered a long, when it entered a short, for the complete set of periods. So what is the profit? What is the contract size? What is the margin taken by that time? How many bars it had holded, and what it throws a lot of other factors, right? And there is a report section is there. If I click on the report, it will throw me an interesting backtest results. So what it says, so it says like, I mean, there are 233 trades are there, so which is pretty high for an on an average we are expecting more than 1 or 1.5 times trades. On average, we are expecting 1 or 2 trades in a day, and the results are good, but still, I mean, the compounded annual return is good, 27.73, and the winning ratio is not at par. I mean, it is 37%, but still, it is able to make, it is able to generate. The system is able to generate returns because of the risk-reward ratio. But when it comes to the risk factors, the risk factor what I can view as a risk factor is there are, at some point of time, there are 13 consecutive losses. The 13 consecutive losses will, test the patience of a system trader. I mean, one cannot afford and losses keep on accumulating consecutively. I mean, it will test the patience and the psychology of the trader. This is one factor you have to be very clear on any kind of trading system. What is my consecutive losses if I trade this particular trading system, right? It is not, I mean, if you are trying to do any sort of lower time frame trading, you can expect anything around 8 to 13 consecutive losses at some point of time. It is always possible, and one has to be adapt to that. One has to be prepared for such environments psychologically. And another factor is your system drawdown. So this says like the system drawdown is at some point of time the system is delivered a risk of 33.5% of loss from the peak portfolio. So if you are an any kind of trader, whether it's a systematic trader or a discrete trader, anyone would hate a loss. So probably, I mean, but the thing is, if you want to survive in the game for a long time without predicting the markets, and especially when it comes to systematic trading, it is always good to have a controlled risk. And if your portfolio is not giving a loss of 20% or 25%, the system is rated as good. However, if it is anything above 25 to 35, I can say it as it has a little bit of increased risk. But anything above 40 or 50, system is maybe the system might be giving an interesting results. But at some point of time, the system might be broke. Or if you are start trading the system once all the best scene is over and you started trading, and that point of time when the worst case comes, so you will experience a lot of heat in the trading system, and probably you will not be interested more in trading system when you start trading and the worst case scenario comes. So prior to that, you have to be very clear on what is your maximum system drawdown is going to give. So apart from that, a lot of factors are here. So we are not talking all the other metrics here because of a limited time, and I'll try to compare with a different time frame as well. So just have a look into it. So we have 233 trades, that is one metric, and the compounded returns are 27.73. So 27.73 annual returns in the sense, I mean, it is on compounded returns. It is not on month-on-month returns or on year-on-year returns. It's on compounded annual returns of 27.73, right? So what does it say is like maybe some year it would have delivered an 100% returns or a 200% returns, whereas the other year it would have delivered an 5% returns or an 10% returns year on year. If you ask me, I mean, there is any trading system which can give you consistent returns. It will not. There are no systems could give you an consistent returns like an 5% returns or a 10% returns on month, and even on year, the consistent returns are not possible because the market is not the same market every year. Every year, the market is not even delivering in consistent returns. So for this year, the returns are different, and the last year results are different. So if you are trading the markets with a simple logic, and if you are expecting in consistent returns, it is not a practical scenario, right? So I mean, if I say like Sensex is delivering for the last 10 years, it is delivering in compounded returns of 16%. If someone is saying you, it doesn't mean like the Sensex is every year it is giving an compounded returns of 16%, right? Every year it is giving in consistent. Is the Sensex returns are consistent? It is not, right? So and so your trading system as well. You cannot expect an 50% or 100% consistent returns from the trading system which is using a logic which is not dynamic in the nature. The only thing is we can have a compounded average returns. If the compounding, I can say any compounding average which is better than 20% in a lower time frame is really a good one. But what has to be taken into the factor is the risk is the main one which has to be taken into the factor, because that is the one which will keeps you going for it will keeps you with the game in the game for a long time, so that you can beat the market returns, right? So I'll try to do a backtest in a different time frame probably, and let's see what happens in a 10-minute. All the other conditions remains the same 100 rupees brokerage per transaction. So these 100 rupees transaction is inclusive of all your brokerages, slippages. So since I am doing it in a discount broker, probably I mean my numbers will come around 100 to 150. So depends upon your broker. You have to do your own backtesting settings. So right now I'm doing the backtest for 10 minutes. So if you look into the 10 minutes, you can look into that the ending capital has been slightly reduced, and your compounded returns has been slightly reduced, and your winning ratio has been increased little bit higher. I mean, I should say like the winning ratio in a lower time frame, anything above 40 is a decent one. So it is an 41, and the number of trades has been halved. Earlier it was 2,333, now it is 1,221. So which is pretty good. You are saving a lot of money in brokerage, and but the thing is, I mean, slightly and lower returns are here. Maybe that is because of a little bit of increased risk. But when you look into the risk factor, you have a slightly increased risk. Earlier it was minus 33%, now it was 37.90%. So if you want to trade the system, I should say like the system is rated as an slightly a risky one compared to the 5-minute time frame. But still, the one good thing is you have an slightly reduced, slightly an increased winning ratio, and the number of trades get reduced. That is one positive factor. But on the risky side, it gets a little riskier. So if you go look into the equity curve, it says like, I mean, it's come a little smoother, at least from 2013 to 14 onwards, it started showing little performance, right? But whereas right from 2000 to 2013, it remains in a flat area, where, I mean, it will really test the patience of a systematic trader. So let's get into a 15-minute time frame. 15-minute. Let's see how it happens. What happens? We'll do a back testing, and then I'll go to the report. So now, if the report says, I mean, the ending capital once again has been a little bit lower, and this time it was lower a little more, and the annual compounded returns has been declined from 27 to 24 point, I mean, almost 25% returns here. But still, it is rated as a interesting system. The risk reward ratio is even good in a 15-minute time frame. And if you look into the winners, now the winners has been decreased to 37 back again. This is post your commission, slippages, everything. And if I look at the risk factor, it is minus 44.71. Means it's a highly risky trading system to trade, and it makes erratic returns. Returns are not consistent. It makes very huge gains and then huge losses. So if you're what I can how I can rate it is slightly and even more riskier compared to one 5-minute and a 10-minute time frame. And so it's so this is how you have to check across different multiple time frames, and you have to come to a conclusion what is the nature of the trading system. There are a lot more other concepts are there which will try to understand the nature of the trading system and to control your risk. But these are the damn basic factors to be looked into any kind of a trading system. Right, and let's go for a final one, hourly. Hourly, let's say I want to back test. I'm just looking into the report section. So if you look into that, the ending capital is even more slightly decreased, and then your winning ratio has been increased a lot. Your trades, the number of trades has been gone down drastically. Yes, of course, I mean, trading a higher time frame will get a less number of trades, but what matters ultimately is your risk. Your risk says 45.81%. So it's still a risky trading system as like an 15-minute time frame. But if you are sticking to your goals, yes, the returns you can expect, but you cannot expect as a lower time frame does. So based on this, what conclusion we can come to know is higher the time frame in Supertrend, higher the risk. But is it the same thing will occur across all the time frame? If you ask me, no. You can also build a trading system in a higher time frame at a thin risk. That is also possible. But when it comes to Supertrend, the nature of the trading system says higher the time frame, higher the risk if you are doing it systematically, right? So it is always better to stick with the lower time frame, and either a 5-minute or a 10-minute, it is fine. But anything above that, the risk is increasing drastically because the risk, the maximum system drawdown is coming around more than 40%, which is not at all acceptable, right? But however, if you are trading discretely, probably you need to know a lot of market dynamics to practice it. When it comes to stocks, it is not advisable to trade stocks completely systematic, because these kinds of long and short kind of trading system will spoil the game when there is a very big gap down or gap up. You have to carry forward the trading system. I mean, you have to carry forward your position every week and every month. You have to do a rollover. So such kind of systems are not advisable to trade stocks all the time. So what you can do is you can do something like, and you can try to find out some sort of high beta stocks. You can trade the system systematically as long as the high beta remains high beta. When the high beta of the stocks gets declined and there is no more a high beta, stop trading the system. Such kind of things can be, I mean, it should be included in your trading system rules as a filter. Like high beta is one sort of filter, which will tell the system, trade the system only if it is a high beta stock, and if the stock is no more high beta, just don't look into it, just don't trade it, right? So by that way, I mean, we'll be trading only the trendy moves in the market. Or you can put a rule something like, whenever the beta in a stock is increasing, you want to trade, and whenever the beta has been declined below a certain level of threshold, you don't want to trade. So that once again you can catch the trendy moves, because increasing beta is always followed by a trendiness in the market. The trendiness in the market, what I want to mean is there is the intraday movements are erratic, and where most of the trading systems are profitable, and you can use Supertrend if you want to control your risk. Not only Supertrend, I mean, you can use any other trading system, but why Supertrend, if you ask me, I mean, it has an trading stop loss mechanism. Whereas if you find a different trading stop loss mechanism which is better than Supertrend, yes, go about it. It's not like you have to trade only the trading system, right? Okay, fine. Now we're done with the comparison of Supertrend version 3.0. Now let's look into Supertrend version 4.0. So in my system, I named it as Supertrend filter. Let me look into the position sizing settings here into the code. So the default value remains its same 4 and 10. All the other logic remains the same. The trade delays are 1, 1, 1, and the position size is 100. So everything is perfect here for backtesting. And all our trading conditions remains the same long and short. And instead the periodicity, I just want to start from 5 minutes. Okay. I'm just doing a backtest in Supertrend 4.0. I'm just doing a backtest. This is for 5 minutes. Just opening the report. You can see the ending capital is slightly increased. Earlier it was 9 lakhs in case of an Nifty futures with Supertrend 3.0. Whereas here the ending capital has been slightly increased. It has been increased because we are saving a lot of money in the bad trades. We are not taking a lot of bad trades in it, right? On one factor it is good. And because we are not taking a large number of trades, our number of trades has been declined from 2,333 to 787. Approximately, it would have saved you some 500 plus trades, right? Some 450 plus trades. And your compounded annual returns has been increased 31.98. 31.98 compounded returns. It's phenomenal returns. I should say it is, since it is a compounded number, it is represented. The numbers looks like a lower numbers, but it's really an interesting one. If you ask any fund manager, 31, anything above 30, it's super erratic for them, and anything above 40, it's even more super erratic numbers for them. Okay, the winning ratio has been increased. Earlier it was somewhere around 37 to 38. Now it has been 40. The average returns for the last right from 2008 to the backtesting data which I am having is right from 2008 of January to somewhere around July of 2014, right? And this doesn't include the current data set. Current data set, anyways, I'll try to do one more round of backtesting analysis. And when you look into the losing part, is the maximum consecutive losers remains the same. It remains around 12. Right. Earlier it was 13, now it was 12 in case of 5 minutes. But still, I mean, one has to be mentally prepared for such losses. Such consecutive losses is always possible once in 6 months or once in a year. If you are trading systematically, definitely you will go through such kind of scenarios. And the maximum system drawdown, it has been came down drastically because it was trying to save you in terms of some of the bad trades. So earlier it was 33%, now it has been came down to 30%. If you ask me, it is risky. Yes, it is slightly risky, but it is better than what I should say is it is better than Supertrend version 3.0. The risk has been decreased slightly. But to be if you want to trade on a very great trading system, your maximum system drawdown, anywhere below 20 or anywhere below 15 is phenomenal, and it is really interesting to trade the system. But such trading system looks good in a backtesting result, but may not perform well. So you have to be a little bit aware about this trading system before trading live. You have to go through all the trading analysis process to understand whether even if a thin trading system is good to trade in a market, right? It's really easy to generate such kind of low risk trading system, but when it comes to practical trading, you can expect a lot more. The same, we cannot expect the same performance in a live trading environment, right? So apart from that, AmiBroker throws a lot of performance metrics. I mean, this webinar we're not covering any such performance metrics. Probably maybe in a different webinar we'll try to compare it. We'll go through a different webinar for performance metrics, how to understand these performance metrics, and how one can understand and believe in such kind of performance metrics. What are the performance metrics one have to believe it, right? Okay, so let me get into an 10 minutes. So 10 minutes probably we'll be getting in different results. So still the ending capital, once again, since we have moved to a higher time frame, it has been decreased, and then winning ratio is really pretty good, 43%. And when it comes to the risk, 50%. So the system is highly risky when you want to trade in this kind of environment. But if it is giving a 50% drawdown, you have to understand why. You have to go through the historical data, and you have to try to understand why the system delivered an 50% of risk, why the market fallen down, why it loses half of its portfolio value at some point of time. So you have to do some sort of analysis from your side to understand or to overcome such kind of situations. And the chart's equity curve is really smooth, even in 5 minutes and even the 5 minutes and the 10 minutes. The 50% drawdown has been occurred when you start trading system. The worst case scenario came. It had made an returns from 2 lakhs to 4 lakhs, and once again the same 4 lakhs has been halved to 2 lakhs. So at that point of time, there was a 50% returns. You lost 50% of your portfolio from the peak. So any values, I mean, if you're losing in the maximum value amount in terms of percentage is represented as a maximum system drawdown. So in this particular, the system loses 50% from the peak. That though it's very early, it lost very early, not later part. Later part maybe it would have a very less trading system. But at some point of time, it says like there was a 50% loss in the system. So if I can start now, I can expect a maximum loss of 50% if I am going through the same worst case scenario, right? So it's slightly risky in nature. And then if I go through a 15-minute time frame, just go through 15 minutes, the rules, everything remains same. Your number of trades, the ending capital is same. It doesn't decrease when compared to 10 minutes, and number of trades has been came down drastically. And your comes to the risk, it's slightly better. It's still giving an 30.36% of drawdown. It's still it's fine. It's fine compared to a 10-minute time frame. It's pretty good in a 15-minute. But one thing is the rollover cost is not measured here, and the data here is an continuous contract data. Continuous contract data in the sense, I mean, if I go to say I'm going to an hourly charts, the data is continuous. June, July, August. All the contract data has been stitched into one symbol. So, I mean, when moving from one contract to another contract, in such case, in this kind of symbols, you'll always have if there's a high premium or a discount, your system will show it as an very big profits. Those discounts or premium will be shown as a deep losses or shown as a big profits in your trading system. So, if you are testing live or if you want to trade live, don't try to trade in an continuous contracts. Always try to use non-continuous contracts, and global data feed supports both continuous as well as non-continuous contracts. Non-continuous contracts in the sense, if I say like an Nifty April contract, it is only April contracts. Once the contract expires, we have to delete the symbol and we have to move on to the next new symbol. The next new symbol will be once again a non-continuous only. So in that case, the the gap up or gap down pricing will not occur when you are switching from one expiry to another expiry, right? And your system will once again perform different in a continuous contract environment and then non-continuous contract environment during the expiry switchover period. But later, after once the expiry is over and 1 or 2 days are over, the system will try to deliver the same set of results. But if you want an ideal, realistic results, it's better to backtest non-continuous using non-continuous contracts, right? Fine, and one final backtest and we'll finish this demo. So I'm just going to an hourly. I'm just doing an backtest. So here the results has been, the ending capital has been decreased a lot because the number of trades has been came down and the winning ratio remains the same. It's around somewhere around 42.33 and same, it's not much risky or not less risky. It's, I should say, like it's moderate. It's moderately risky. Fine. And so how the trading system works, let me put the trading system on the screen. I'll go to the recent one, the recent database. This database contains till to date data right from December 15, 2014 onwards. It contains nearly 3.5 months of data across all the instruments. And here I'll give you a little overview about how this system works. So I'll do there is a feature called bar replay where we can simulate the markets. So earlier people used to scroll the charts, they try to mark the buy and sell signals. So now, you can do a bar replay or you can do a simple backtest so that you don't need to paper trade your system or you don't need to scroll the charts to understand how the system performed in the past. Right, I'm just starting from I'll say April 6th onwards till to date. I just want to run it in a 5-minute time frame and I'm running it up so that you can see, the alerts started coming in once you've seen the buy or sell signals. And the dashboard tracks how many points currently it is in. What is the target levels, what is the current profit or loss. But as I said, here if you look into the signal, currently the sell signal is running on and the sell signal triggered because it is below 200-day moving average, and when it comes to exit signal it doesn't look into the 200-day moving average. Only the entry points depends upon the 200-day moving average, right? And here once again the buy signal came, so we have to reverse this position because the candle is above the 200-day moving average and also the Supertrend has given a buy signal. Right. So if you look into after April onwards, April 6th onwards, it remains above the 200-day moving average, and probably you can look into it how it is saving your trades, and you can also simultaneously watch the dashboard what's happening here. Fine. If you look into that, the target dashboard shows like whenever the target has been achieved, it shows like achieved, target 1 achieved, target 2 achieved. So this is the one modification which is available compared to the Supertrend version 3.0. This is one additional feature has been implemented. But once the market declines, your target line, your target achieved, that will be gone away. So if it is erasing, don't ask me why it is erasing, because the nature of the logic has been built in such a way. So if you can see, once the target 3 achieved, it says achieved. Once it declines below it, that has been removed back, right? Fine, let me fast forward. See, once again, I just want to say like this looks like it had predicted the big trend, but ideally it is not predicting such big trends, even though it looks like it is predicting. So okay, if you're very new to Supertrend, don't believe in Supertrend as a prediction analysis tool. Always try to use as an control your losses and to reduce your risk, right? And okay, here this is Aditya Birla Neo futures, right? So you can see like it's still not giving, still not close below the 200-day moving average, and the exit signal that came, and your dashboard shows a no trade zone. So the thing is, you have to wait for the next signal, and it will take the trade only if it dips below 200-day moving average. But if it is not dipping below 200 moving average, it will not throw any trades. Now, once again, you can see like probably a sell buy signal is likely to come. And once again, don't try to trade as long as the signal haven't came yet. And don't try to expect the signal may come or may not come. It may or may not come. So it always try to follow the rules. It is good to follow the rules. Okay, here. So this particular scenario shows like, I mean, the uptrend remains intact, and the last it is supposed to be a sell signal in Supertrend version 3.0. However, we had eliminated the bad trades. So such bad trades we can easily eliminate it when it comes to a simple filter 200-day EMA. But you can ask why it is an 200-day EMA. If you are trying to reduce to a 20-day or a 30-day moving average, you will get a lot of whipsaws. So it's better to be in smooth and little far away from the candles. So 200 EMA is one such choice. However, you are very free to practice with any other moving averages, like a normal moving average or a Hull moving average, or you can try it at your own. You can try to change the filters. I can tell you where the filter rules we had applied. It has been applied in the buy and sell section. Applied in the buy and sell section. So anyways, the code will be shared. So I mean, it's a very simple logic implemented at the buy and sell. Nothing much, nothing great thing has been happened in the system, but it's a very simple system which delivers better returns, better risk compared to the older one. Okay, here. So here, the rules have been rewritten. One more filter condition has been added. It says like buy only when the Supertrend condition 3 has been satisfied. This is trend equals 1 is the older Supertrend logic. And also we are also looking into the candle, the close of the candle should be greater above the 200-day moving average, and the length has been set as 200. But however, you are free to choose your own trading system, your trading length. And try to do an experiment with your own site. Right? And once again, on the short condition, we are looking into the 200-day moving average, closing below 200-day moving average. However, at the exit, we are not. The sell and the cover are the rules for the exit of long and shorts. So we are not looking into the EMA part when we are trying to exit the system. But still, if you have certain rules in your mind, you put in one more rules and you rewrite the logic and try to understand how it affects the trading system, right? And what else? So how to access a Supertrend? There are a lot of ways we can access Supertrend in market calls. So these are the ways. One is on marketcalls.in/charts. If I go to marketcalls.in/charts, here marketcalls.in/chart, this is our interactive chart section. So where you can by default you find a Supertrend, but if you want to add an EMA to it, right click, insert the indicator, and say like an moving average, exponential moving average. Make it as an so moving average is here. By default it says 9. I want to make it as a 200. So you can use these rules, and you can always say like whenever the moving average is, right now the moving average is above, the candles are above 200 moving average, so you always take only the longs, right? And you can have a lot of controls over here. If you want to switch to a different time frame, you can switch it to a different time frame, and you can experiment with the rules very easily. And another best part is you can easily backtest the trading system visually, right? And you have more control in your hands. Likewise, there is one more interactive dashboard. It's the same dashboard you can see down here. You can have the 200-day moving average has been implemented. Actually, at the actual Supertrend version 3.0 is running, it is not still 4.0. We are still doing a live testing. Once all the proper testing is done, we will be enabling separately the Supertrend version 4.0 only for Nifty and Bank Nifty futures. Right, and yes, we'll be coming up with a lot more interesting strategies in the future, probably more simplistic and which is having a very decent results with decent results. And as of now, yes, only the Supertrend, the Supertrend logic is as usual as a Supertrend 3.0. Along with that, the 200-day EMA has been implemented so that you can easily figure it out what has to be done, whether I have to skip the signals or whether I should not skip the signals. That the decision has been left to the readers, right? What else? And we have an EOD charts as well. So EOD charts you can we had enabled for both futures and cash, and the data is right from the start of the market, split and bonus adjusted. So you can have a lot of studies about Supertrend. And also very recently we had included two more indicators. One is an Kaufman adaptive moving average. Probably we'll be implementing a lot more trading strategies based on Kaufman adaptive moving average. Another one is an Fisher transform. So these are the two additional custom logic indicators has been added apart from Supertrend, right? And where once again, we have an M6 chart as well, where we can track gold, silver, copper, crude, all those M6 instruments. And these intraday charts will update mostly on every 5 minutes. So good to study, but it always, if you want to trade professionally, it's always good to trade within live feeds, right? And if you want live feeds, yes, we are a dealer of global data feeds, and the pricing is same for across global data feeds and market calls. The pricing remains the same. And apart from that, we offer phone support for our customers as well. And there is a small offer for all the participants. Like if you are purchasing any data feed from us, you'll be getting an 50% of discount reversal from our trading partner program, Trade Genie. So the brokerage is 20 rupees per order, and they are offering Nest Trading Terminal, and they used to provide exchanges like NSE, BSE, M6 and M6SX. So they are the members of NSE, BSE and M6 exchanges. Right. So we can take questions now. I think we are already exceeding the time, so likely to take a limited set of questions. Let me go through the questions. So if you have any questions, just shoot it down. I'll try to answer all those questions. Okay. Oh, big questions. Okay. For intraday trading, 5-minute Supertrend can be used for stocks and futures, or for positional trading, is it more useful? So as I told, the question is from Babu Iholi. He asked, can I use it only for intraday trading? See, whatever you're using, whatever the strategy you're using, first it is always good to do a backtest, then you can blindly go with that. Asking a question like, 5-minute Supertrend, whether it is suitable for intraday or positional, You just do a personal backtest and you try to understand the nature of the trading system. Then only you can judge whether it is good for intraday or positional trading. I can simply say like it's good for intraday trading, but what does it make sense or not? It doesn't make sense because your trading style might be you're an intraday trader. Probably I'm a systematic trader, so my views might not match yours. You might be a professional, positional trader. Someday you want to do on positional trading, someday you want to do on intraday trading. So it doesn't make sense. To ask such kind of questions. It's irrelevant. It's always recommended to test on your own and try to understand the nature of the system. Try to understand the risk involved in it, and then you try to decide whether you have to go for an intraday or a systematic or a positional or a discrete. So whatever the way you are. But when you ask, when it comes to systematic trading, I can easily say like Supertrend suits 5-minute style, because in 5-minute style it is less riskier than any other time frames when it comes especially to Supertrend, right? And yes, there is one more question from Arvind Krishna. Any suggested settings for 1-minute trading in ATR? Arvind Krishna, if you are using Supertrend for 1 minute, don't try to do that. You will be getting a lot more signals, whipsaws. The winning ratio is not good. The risk reward ratio is not good. So if you are trying to do and build a 1-minute trading system, make sure that risk is part of the game and it is having a controlled risk, right? So it has nothing to do with if you try to do any kind of parameters, any kind of settings you are trying to do, it's really tough to make money in 1-minute trading. It's really a risky one, and because with simple formula you cannot make a consistent returns in a 1-minute time frame. This is my personal experience. Okay, Chirag Patel is asking what are whipsaws. Whipsaws, see, when it comes to systematic trading, I don't say whipsaws are bad trades, because that is a part of the system itself, the nature of the system itself. The nature of the system says, it's having only for 40% winning ratio or a 42% winning ratio. So yes, the bad trades are possible. So that is because it is possible, because it is a part of the game. So generally whipsaws means, people say that it is bad trades. Bad trades are represented as whipsaws. And there is one more question from Mantu Kumar. He asked whether can I trade in hourly or daily time frame. No, if you are a discrete trader, you may use it, but still the winning ratio, the average winning ratio for the last 7 years remains the same, 40% winning ratio. So if you are trying to trade discretely, make sure that you are taken all these things into an account. In daily time frame, it is even more riskier, and hourly time frame, it is even more riskier. But you can use only when you are trading discretely, right? And Ganeshan asked whether either it is an 200-day EMA or a 200-day double exponential EMA. It is a simple 200-day EMA, which we used in Supertrend version 4.0, right? So Chirag Patel has been asked once again, how do we roll over to next series in automatic trading from 3.0 and the version 4.0? The rollovers has to be done manually. Probably you should follow our last webinar where we have done on how to do a rollover from one series to another series. It has to be done manually. There is no automatic procedure as of now existing in the market. So rollover has to happen manually. And so Vasudevan says version 4.0 is great, but a dynamic version may be greater. Vasudevan, yes, whenever I try to find some time, we'll try to post some dynamic versions. We are also looking into dynamic versions, but still, I cannot mess with all the systems, trading systems, and I don't spoil the nature of the trading system at this point of time. Yes, dynamic version, maybe I don't want to implement with the Supertrend, maybe with some other trading system, we are looking into one more dynamic nature. Like trying to convert a trading system dynamic, it's somewhat slightly difficult for me at this point of time. But yes, started working on dynamic trading systems these days. Maybe in an upcoming versions we'll be seeing a lot of more dynamic versions. But converting a system into a dynamic, it's really a challenging one for anyone. Sundar Natarajan asked, do you not account for slippage in backtesting? Sundar, I had already included a slippage in my backtesting. As I said, it depends from broker to broker. I had made my own settings, but if your setting is different, you have to do your own backtesting and have to come up with different results. Arvind Krishna asked, can I backtest? Can you please backtest for a 1 minute backtesting? So as I said, I mean 1 minute backtesting is irrelevant. It's really not it will not have really interesting results. One more question from Mantu Kumar. Mantu Kumar said, I mean, it looks like the session is boring and it's too much complicated theories. Mantu Kumar, I mean, my answer is, I mean, when it comes to systematic trading, even the trading itself a boring activity. I mean, yes, theories are boring, and you have to cross all those stages. And live experience is different. I mean, maybe it is exciting to trade an intraday strategy discretely, but systematic trading is boring. Making money is boring, right? Babu Prasad asked, can you tell us the difference between those parameters, net adjusted risk and annual return, risk adjusted return? Babu Prasad, I don't want to do it in this webinar. Probably, I mean, I would like to take questions more on Supertrend. And there is one more question from Sundar Natarajan, who trading at the lower time frame says 3 minutes reduce the risk compared to 5 minutes. So personally, backtested trading time frame less than 5 minutes. I mean, it's not fruitful as like 1 minute. I mean, as 5 minutes does. You can try with 1 minute or 3 minutes, but the results are not interesting to me. And once again, the risk part is it says even more riskier to trade and a time frame which is less than 5 minutes, especially when it comes to Supertrend. And Anand Krish says like why to use an initial capital of 2 lakhs. Yeah, it is one good question. I mean, see, I mean, your normal margin is for taking a 4 lots of Nifty, it's somewhere around 60,000 to 70 or 80,000. But why one have to have an 2 lakhs in a hand for trading and 4 lots of Nifty? If you ask me, I mean, see, at some point of time you can expect a risk of 30% from your portfolio. So if you are trading right now and if you are experiencing an loss, probably you need to have an M2M margin to withstand. So that's the reason, I mean, additional capital has been used to withstand the M2M margin. However, once your capital starts going above 2 lakhs, it's keep on growing. You can remove the remaining M2M losses and you can use your profits as your M2M losses. So that's how it works. Vinod Kumar Agarwal asked, sir, I am a newbie, but will catch up learning soon with your training and your well-designed softwares. A hypothetical question, what parameters will change the performance near to 100%? Can we have a safe mode 100% Supertrends version signals, maybe once a week or 100 days or any other conditions? Vinod Kumar, my answer is, I mean, you cannot expect a system to be picture perfect. 100 system winning ratio system is not at all possible. There is no holy grail. This is the realistic world, and when it comes to trading, you should have realistic trading goals. You cannot make an 100% winning game all the time. I'm not saying it is not possible, but it is not possible consistently, right? Anand Krish asked, if you set your initial capital to 1 lakh returns might look attractive. Yes, returns might look attractive, Anand Krish, but it is not realistic to have. But the thing is, once you face the worst case scenario, once you start trading, then you will feel like the risk is even more riskier. I mean, so once again, to control the drawdown, we are trying to use a different. We are increasing the capital from 1 lakhs to 2 lakhs so that your drawdown gets controlled and you can run the trading system for a long time. Because if I cut down my 2 lakhs to 1 lakh, your compounded drawdown, I mean your maximum system drawdown might double, and it's not good for a better trading culture. So always better to try to have a little bit of M2M margin to withstand those risks, because once again, as I said, it is not predicting the market. Narayan Raja, he asked, high beta, what is the range suggested for systematic trading? Narayan Raja, I mean, I personally, I don't trade stocks, but these are the high beta things are the one which we like to do. And everything I done in the backtesting part, but I haven't done any real trades. So I'm not the best guy to advise on high beta. But yes, high beta gives you trendiness in the market. So I request you to try with some little bit of testing from your side. Okay. So where can we get the high beta stock list? This is a question from Babu. See, what I can say is there is a high beta scanner available in Market Calls. You can go through the library and you can find the high beta scanner over there. Using that, you can scan the list of stocks, or you can find the high beta. And the high beta scanning should be done on the UOD basis. And yes, Supertrend version 4.0 will be available in the site very shortly. So once the webinar is over, once all the videos have been posted, you'll be getting the links. Whoever is participating, they'll be getting the links, as well as it will be posted on the main page of the website very shortly. Have you tried position sizing in your backtesting? This is a question from Sundar Natarajan. Yes, I tried with various kinds of position sizing, but those position sizing are not realistic. If I'm trying a compounded position sizing, the results might be even more exciting. But if you want to truly understand the nature of the trading system, it is always first good to trade or backtest with a fixed lot size. That is the very first point of systematic trading. However, you can convert the system trading to an fixed percentage. You can trade it on a percentage basis, or you can you can do on dynamic position sizing. That is also recommended, but that comes the later stage of trading part. But to be very basic, to start as a beginner, it's really good to start with a fixed position sizing. And also asked, as your equity capital grows, shouldn't position size increase proportionately? So, as I said, I mean, see, the AMI broker implementing a dynamic position sizing, you need a greater control over the code, a better understanding the code, then only you can do one dynamic position sizing. But if you want to do if you want your position size has to be increased, then it is always better to use an percentage-based position sizing. Otherwise, if you are very new to system trading, it's always required to trade with fixed position size. What is the difference between intratrend and supertrend? Intratrend is proprietary, not for everyone. I mean, it is not open to public, limited to few members, and supertrend, yes, it is open to public. That's the major difference. So why and 4 and 10 for parameters? This is a question from Anand. Anand, these 4 and 10 are the default parameter which we are using for a quite long time, and we haven't changed it. But I mean, you can do your own analysis. There are some more concepts like backtesting optimization. And optimization is today out of scope, so it is not covered for today. But still, if you want to explore, you can use. There is one more function called optimization. You can explore it. Karthik yes asked how the trading system behaves when backtesting. I am on while I am on trading on expiry, and the next contract price starts vary from it contract to another contract, and it varies profits and loss, which is not real. So the backtest results considered as real? Nowhere the backtest results are considered as real. Probably we can say like it is very close to the realistic results, but you cannot achieve an real backtesting results, because I mean you cannot get real backtesting results while trading, because you are we are taking close as the entry price and the exit price while trading. But when you are trying to punch the order, it will be either triggered at the bid or ask based upon your buy or sell conditions. So there is a spread slippage difference is included in it. So if you are making an very decent slippage is included into your trading system, then probably you will be very closer to the actual trading system results. However, based upon the volatility, the slippage just changes. So a little bit of idea on slippage is also required to get on realistic results. And anyways, I mean, rollover cost is not included. It has to be manually deducted from your side as well. Are you personally follow any of this trading system? No, I mean, I'm not personally following any of this trading system. All these trading systems are open to public. I'm not following any system which is kept open to public, right? Is there any alert whenever Supertrend and EMA crossover? So alert can alert a stock? Yes, alert is possible. You can run a scan, or you can even put on the over the charts. Alerts will become as an pop-up and sound alerts. And that is fine. I mean, too much questions. It's really. I mean, we are already running out of time. What I can tell you, I mean, we have our own community. You can post your questions. I can take all your questions over there. So you can go to marketcalls.in/community. So it is like an, I mean, social and social media for traders. You can post your questions, and people are there to answer it. Or if not, someone else is not answering, I'll be taking care, and we'll try to close out to your issue, right? So if you want to ask any questions relevant to Supertrend or any other trading systems, you can always invite her to post your views in your community, or you can ask your questions and get the answers from the experts, right? And thanks everyone. Thanks for your time, and thanks for listening to me patiently. Probably we'll try to catch up and try to answer even more questions offline. We'll take all the questions, rest of the questions offline. And thanks everyone for being here for a very long time. Thanks.